and welcome to the latest episode of the Insurance COVID Cast. And again, we have another newsmaker special today with the editor of Insurance Age, Sian Barton. Hi, Sian.
Hiya.
And today we'll be focusing on the launch of Partners and, the new broking venture, which is among its main players, has Phil Barton and Stuart Reid involved, who are joining us today. Hi there, guys.
Hello.
Hi there, Jonathan.
Can I just ask first thing, is it capital Z or capital Z, or does it depend which country you're in? Because they're obviously backing this business.
Capital Z is how they like to be known.
Stuart, you're in the capital Z camp.
Yeah, well, I quite like Cap Z actually, but I think I like capital Z. But Cap Z for me.
Cap Z just doesn't have the same kind of oomph about it, does it really?
It doesn't really, no.
No. So I suppose I'll have to ask you, what was the original idea and thinking behind Partners and how did you kind of both get involved with it? Phil, perhaps you should start here.
Well, the idea came from reflection following my departure from back in March 2019. So I sat and reflected for a little while in my garden back in Cornwall and decided that whilst there were some great things that were a part of the Jelf journey, there were other things that I think we could have done better. And when I combined that with my reflections on the market generally, I felt there was space and a need for a different style of broker in the market, a new generation of insurance broker. So that was the seed corn moment. And having consulted with sages such as Stuart and other friends in the industry, it became apparent that there was quite a movement, that there was a need for change.
So Stuart, that's how you got involved?
Yeah, Phil approached me. I'd been doing the rounds. I'd looked at PE myself. I'd had approaches from various companies. Indeed, Phil and I spoke whilst he was at Marsh. But when Phil got into the detail of what he was proposing with this business, it was very exciting. It answered many of the questions that were increasingly being asked about the consolidation in the industry, private equity investment, etc. And it gave me confidence that I could join a company that I had great belief in. It is very different, and hopefully we'll explain a bit more about that in this interview.
So when you launched, you've got a couple of broker partners on board already, such as LaPlayer. How did you choose those partners?
Very simply, none of the businesses that have created the platform of Partners and were for sale. I simply looked up my black book, gave them a call and said, we've been thinking of a new style of insurance broker. We think you'd be ideal for that. And I'd like to talk to you about the concept. The fact of the matter is, each of the businesses that we have acquired had a very similar approach to clients. They had a culture that had seen them invest heavily in their people. And all of the proprietors wanted to be a part of the vision. And that was a critical point. Each and every one of the businesses and the owners of those businesses are now shareholders in Partners and. So you don't get the same conflicts of interest, you have an alignment of view, and you have a sense of purpose in the business, which sets us off on the right course.
Yeah, and what I'd add to that was that I wasn't involved in that process at all, but I did know LaPlayer or LaPlayer, I don't know which way, and they've been feted by many of the names that you'd know, but has hesitated at each time, I believe, because they didn't feel that the culture was the same as the one that they had at the moment, or the culture was so different, it wasn't one they wanted to go to. So having known that business, it wasn't a great surprise that they found that this home would be the right one for them. And that business, like many of the others, have specialisms. They're in a great area of the country, Cambridge, etc. And it's just a very good fit.
So I know this question's come up a few times then. So why is Partners and not just another consolidation play dressed up as a non-consolidation play? Go on, Stuart.
Jonathan, how long have you got?
Yeah.
We've got hours.
Yeah, I mean, it's a fair question, particularly to Phil and I, who no doubt will be somewhat accused of bringing the consolidation to the fore over the preceding 10, 15 years. But consolidation now is very, very different to when it was when we were getting stuck in. I mean, you've got very, very big companies buying brokers. Okay, to be fair, some of that was going on at the time. But, and I hope I'm not stealing it. Well, I am stealing your line here, I guess, Phil. But Phil and I have discussed it many times. The prices that are paid for these businesses are so rocket high that it brings a certain pressure to the businesses that they buy. So these smaller businesses have to become very different very, very quickly. And I've said it elsewhere, and I'll say it again now. Certainly, even in my times at Bluefin, which were some years ago now, there was always a pressure because you brought an environment that was very different to the environment that many of those people had experienced when they joined the brokers that you bought. What Partners and does is perhaps get back to some of those basics that are so fundamentally important to serving clients and serving the employees. A fair and equitable business to work for. And I won't steal more of Phil's thunder, but that each of the employees treated fairly, that the clients are placed in portfolios that suit them, don't necessarily suit the broker. If you're paying 16, 17 times EBITDA, pressures are intense. And therefore, the business becomes very different to the one that it was prior to acquisition. Phil, is that fair?
Absolutely. I think the big difference is that most of the consolidation that takes place in the market today is about scale. It's about buying anything in order to grow GWP and client relationships and then leverage those relationships with insurers and with the market in general. Because of the financial strain that puts on your business model, you then start reverting to commoditization of the product. You seek to make short-term profit in order to make your financial management work, rather than doing what's right by the client and what's right by your team. And that's the big difference. We're not consolidating for scale. We have no real intention of making multiple acquisitions into the future. We're much more inclined to want to attract high quality talent that wants to be a part of our culture and put clients back at the center of the advisory process, rather than simply pile them high and sell them on to the next bidder. So we are, in essence, I would say, a deconsolidator. We're an invitation-only club seeking to attract the very best talent in the market. That talent tends to be in large consolidated vehicles where they're feeling deeply disenfranchised.
Okay, I just want to push you on that point a little bit more, just because some people in the market have said you're still private equity backed, and that's often where that pressure comes from to get that scale and grow. How would you convince the cynics that you're not going to be under that pressure?
Sian, it is a great question. And when we started to look at the private equity partner that we wanted to work with, we were looking for a partner that understood our proposition. CABZ are a specialist in the sector. They understand insurance distribution. They understand insurance distribution in the UK and the US. So that was key. Secondly, they have a long-term relationship with myself. They were the driving force behind Jelf, and I built a 10-year relationship with the senior partners in CABZ. So we understood each other, and they were key decisions for us. I think the third point is perhaps the most important, though. Most PE comes into broking, which is in essence a long-term business, and want to start talking about exit the minute they have entered. Their horizon is 2-3 years, maybe 4 if you push them hard. Well, CABZ's approach is completely different. Their average holding is 80 years, and their longest holding is 13. So that enables our model to flourish. It enables our model to be built in a sustainable way without compromise to the values of client service and a team that we hold dear.
And also, I had a little experience of SBJ, CABZ. They backed SBJ, which was a business that I bought. And many of the things that we're extolling at Partners and were part of the culture at SBJ. So even before they knew Phil and they got involved with Jelf, they had that nurturing of the things we hold dear, even in all those years ago.
Can I ask then about timing and really why now? And did you ever think about putting the brake on because of this little thing called COVID-19, which has got us all, stuck at home currently, going a bit crazy, especially in the week which would have been the Biba conference?
Yeah, and that's a big loss. I think the Biba conference is a fantastic event and something I was really looking forward to under the new guise of Partners and. The reality is when we built our plan back in May, June of last year, we'd set out our stall to launch on the 6th of April. And part of that launch was the instigation and creation of our Acturis platform, which coincided with the rebranding of our first 2 acquisitions. We passed that stop-go moment with momentum, with wind in our sails at the back end of January, and therefore we were committed to launching Partners and alongside the Acturis entity as of the 6th of April. As it happens, it was the best thing we could have done. We had to be fleet of foot, we had to be agile. We were proposing to launch the business internally at a huge conference for us at Silverstone on the 26th of March. With 7 days notice, we decided to cancel that and reverted to a live streaming YouTube conference to launch the new company, which, given that we have a belief in great utilization of technology, was a fitting launch for our business. And our marketing team did a wonderful job in changing horse halfway through. So I think there was some risk and some new challenges caused by trying to roll out an Acturis entity remotely whilst everyone was working from home. And the truth of the matter is, by launching it, by establishing that Acturis entity, it enabled us to work from home much more effectively from the 6th of April. So I think we're in much better shape as a consequence of having been brave and driven through that launch. So no, we did think about it for a nanosecond, but decided that it was the right thing to do to crack on.
So you've been up and running officially for about a month now, if it was April the 6th, just over. What has the response been from the market like, particularly insurers?
I've had meetings with all of the major insurers. In fact, we're in a second round of meetings now, and our view was that the market was due a turning point anyway, that the cost of distribution in the marketplace was too high, and that insurers were going to need to respond to that. If anything, COVID-19 has brought that into sharper focus. I think the insurer community recognise that they're taking billions of pounds worth of risk, and to a large degree, distribution has been running off with the crown jewels. Our model is structured to redesign the economics of our marketplace. We do not need the leveraged commissions. We do not need some of the instruments used by large distribution to make ends meet. So the insurers have been very welcoming of a different style of approach. Our approach has been very clear. I'm not really interested in negotiating incremental commission changes and the financial terms of our relationship. More than anything, I want the insurers to commit to a fantastic client proposition and to establish favourable underwriting and claims approaches when we need to use them for the benefit of our clients.
When it comes to other people who are interested necessarily in the business, potential employees, I think, Phil, I hope I don't spare your blushes here, but I think, 1,500 LinkedIn requests after the first bit of publicity went out. I mean, there has been a lot of interest. I've been approached, many others have been approached. And I think it does go to prove the point that Phil made earlier, that there are some disenfranchised people out there who are looking to go back to what used to be, or perhaps can be better now than where they are. And clients, well, I put my insurance with Partners and, so I think that's a vote of confidence, isn't it?
Well done, Stuart.
So, if you look in the crystal ball, gentlemen, when we roll forward 5 years, how do you think the success or otherwise of Partners and will be judged?
From my perspective, I'm really launching this business for two clear reasons. One, I wanted to create the best team I've ever created. I've had the privilege of working with some great teams over the last 38 years, but this gives me an opportunity to absolutely handpick the best team. Secondly, we want to create a legacy in the market. We think the market is heading in the wrong direction. We believe we can be the catalyst for a change in that market, the catalyst which puts clients back at the forefront of broking, brings together great technical advice with superb client service and great use of technology to deliver a fantastic solution. So we do want to be part of the turning point. We do want to create a movement, and we want to get broking back on the right track. And if we achieve both of those goals, then I'll be happy.
Yeah. So similarly, I mean, how can I totally agree with all of that. I think a business that we can be proud of, you know, we've seen businesses grow and corners being cut, but giving the clients what they need, but also having an environment for the employees, for our teams, that is fair and equitable for all. I've talked about many different types of insurance with Sian recently, that necessarily some businesses find difficult to give to their staff, to be egalitarian, bonus structures, various other things. The beauty of Partners and is everybody is in this together. It's a very transparent company. If you were to write down on the back of a fag packet the 10 things that you would like from a broker now, most of those people who are disenfranchised would do the top 10 that we've got. And that's what we've got to maintain. Jonathan, I think in a column that you wrote, you said, if it remains to be seen whether these boys can do it, in 5 years' time, we hope to prove to you that what we've said today has worked and worked very well for the clients and for the teams that we employ. We are absolutely confident this is different and this will work.
The key point for us is we don't need to be and have no ambition to be the biggest. Our ambition, our driving force is to be the best advisory business in the UK, and that's a rallying call for anybody who's excellent at what they do in our market.
Well, as I'm now quite attuned to homeschooling, I'll tell you, if you guys get an A or B or a C in 5 years' time.
Yeah, thank you.
Thanks very much for sharing your thoughts and sharing your time, Stuart and Phil. And thank you very much to my co-presenter, Sian. Thank you very much all. As I always say this at the end, Gorsi is brought to you by an insurance agent and Insurance Post. If you want to register or subscribe to either title, then please look at the banner and look at the button up here to click on, and you can subscribe or register there. But until the next COVID cast, it's goodbye for me and stay safe, everybody. Cheerio.
Bye.
Bye, Sian.